Another big story coming out of China, the central bank's crackdown on cryptos, calling all crypto-related activities illegal, which leads me to you, Doc. You're our resident crypto player.
The department published, then removed comments on an upcoming executive order on cryptocurrencies. The prices jumped on that release, and now the details of the actual executive order are out, and even you can remove it, Elon. It's like when I delete a tweet, you know, when I think better of something. Someone.
Hi guys, I hope you are doing well today. I'm very happy to be back and to share with you this video. I've been working on it for a little while, and mainly because I really want to answer questions from people who are following me for a little bit about the current situation and how you should act with the trading bots. Because, for instance, if you look at my previous articles, I talked a lot about Bollinger, RSI, Relative Strength Index, and how you can use this type of indicators in order to make your trading bot be profitable. But if you notice the markets in the last 3 months, what happens, first of all, we had like an increase of interest rate from the US Federal Reserve. And afterwards, we got this war between Russia and Ukraine, which making our trading bot and all our backtesting not significant enough to be working on the market. And today in this video, I'm very glad because I'm going to share with you a trading bot which is going to work well during this kind of low confidence period market, and on a market where we have a lower volume than usual. But before to start, and I want to introduce you to trading competition that I would highly recommend you to follow. That's competition on which I'm going to participate, and I would highly recommend you to follow it because even more if you want to become better as an algorithmic trader, just on top of being very fun. The first prize is like around 6,000. And the name of this competition is Probability. You have just to go on their blog. I'm going to go on the same time. You go on the blog, you go on resources, on competition, and you will have the competition. The competition is going to close on the 31st of March. And for the first one, is going to make $5,000, $3,000, $2,000. And I believe it's like it's worth for you either for training experience or just to test yourself. And that's going to be, and your bot is going to be tested on live condition between the 1st of April and the 15th of May. It's going to be live simulation. And if you have like the best performance, you are going to be to get a prize. And if not, that's going to be like a good experience for you. And for instance, the bot that I'm going to share with you today, you can adapt it to your ways and make it better and test it during this competition. Okay, so let's pursue and let's start this video with the structure of this video, how we are going to divide this video from 1 to 5. The 5 points that we are going to cover on this video. And at the end of this video, you're going to have your trading bot that you can run during this period of uncertainty of low confidence. Yeah, okay guys, see you. This video is going to be divided into 5 different parts. In the first part, we are going to define what is the Supertrend indicators. We are going to go a little bit more in depth about the formulae, what articulate Supertrend indicators and what's making the difference between the Supertrend indicators and the other indicators that we have seen in the past. And we are going to talk also about the pros and cons of this type of indicators and why in this type of situation where we have like a war between Russia and Ukraine, or like all the kind of last minute news that we are facing lately, why this type of Supertrend indicators is very powerful. After that, we are going to take a quick look, and I'm going to cover this point, which is essential for you to understand why the Supertrend indicators is very interesting to apply in this type of condition, is the difference between a probabilistic approach and a trending approach. When I'm talking about probabilistic approach, I'm talking about normal distribution and Gaussian, such as what we have seen on Bollinger Band. And if you don't have like mathematical and science basics, no worries about it. BB means Bollinger Band, but no worries about it. It's not like something which is mandatory to know, but I'm just going to cover it slightly in order for you to have like a little bit more in-depth understanding and how we can use mathematics in order to understand the market. And after that, we are going to define what is the right parameters that you have to use in this type of period, I'm going to share with you the parameters that I'm using on my case. These parameters are coming from a lot of research and backtesting, and I'm going to explain you how we can go from 20% win rate to more than 40% win rate with this type of indicators. And also we're gonna see afterwards why even though we have 40% win rate, why we are going to be super profitable. For instance, I backtested over the last 2 months and I have used it over the last 6 weeks. I'm around 40% win rate, but the average losing trade is around 2.5%, and the average winning trade here, 60% of the case we have 2.5% return, and the 40% of the case where we are like winning, we have around 7% return per trade, which is like, even though we have like a win rate which is lower than 50%, we are going to be more profitable. And I'm going to explain you, and we are going to define the right parameters live into the market, and you are going to see how the algorithm is going to adapt to the market, and how we are going to fit more with the market to have better results. That's going to be the third part. Then we're going to go on Python programming of this trading bot, and we are going to run this trading bot live. And again, like for instance, I talked to you about like the trading competition. I highly recommend you to go further on this competition. I'm going to participate as well, and I believe that's something which is very interesting for you, because I know in my community we want to become better as an algorithmic trader. You can also test yourself in front of other people, see what your bot worth, and for instance, compared to the Kaggle challenge, this type of competition we are just going to run your bot on live trading. And from my perspective, it's something which is much better than Kaggle challenge, because I have done like probably 5 or 10 Kaggle challenge in the past when I was a student. It's very good, but in this type of competition, because it's live trading, live market, your bot is just going to be judged by the market and nothing else, which is something which is even more fair. And fair can kind of be discussed, but I prefer to be judged on real market rather than on the backtest, which is one of the strengths of this competition. Okay, guys, now that we talked about the introduction and the plan, let's start by talking what is a Supertrend indicator. Essentially, I'm just going to go superficially just for you to get like a quick insight. Supertrend indicators is an indicator which is based on the ATR. ATR is okay. Let's go on Google. ATR, up Investopedia. ATR is the average true range. Essentially, the average true range is an indicator which measures the market volatility, which sends the volatility, and the Supertrend indicators is based on the SAR, on the ATR, and based on this ATR, we are going to define different support level. Essentially, you have to imagine the market this way. I'm going to draw the market in black. Let's say you have like a stock or a crypto. And imagine the crypto is playing this way, up, and here you have a crash, you are going up, and here you have like another crash. And how the Supertrend indicator is going to work? Essentially, the Supertrend indicator is going to drive a resistance level, and as soon as you break this resistance level here like the resistance level that you are going to draw, thanks to this Supertrend indicator, is going to follow the trend of the stock. For instance, if you go up or if you go down, up here we have our trend indicators, and after is going to draw what we call up resistance level this way. And you are, for instance, on this case with Supertrend indicators, you are going to exit your long position here. When I say long position, which means like the buy position, and here at this moment you are going to exit your shorting position and take the profit here and take the profit here. And that's why it's called Supertrend indicators, because you are going to draw what we call a resistance level, and as soon as you break this resistance level, you are going to switch direction, and the algorithm is going to assume that the market is going to crash now because you broke this trending line resistance. And that's exactly what we are going to draw today within this algorithm. We are going to draw an algorithm which is going to drive like a resistance level along the time, which is going to follow the stock. And for instance, you can have, if you go on TradingView up, you can drive this this algorithm. Let's go for instance on RNDR. well, we can take this one for instance for this case. And if we go here, as you can see, we are drawing some trending lines which are going to follow the market, which is going to give us, as soon as we break this line, we are going on a downtrend. For instance, here on RNDR USDT, you living here, and here we are like on the short. And over 13 hours, we are making 2%. But also, we are going to talk about like which parameters we should define, because, for instance, if you go on the normal supertrend values, is 10 and 3, and I'm going to explain you why I'm choosing other values and why it's important to be more closer to the market and what is the balance in between both. That's going to be the third part. I just want to highlight with you why it's super interesting to use this type of supertrend indicators in this type of situation. For instance, if you take a look at the latest articles or the latest videos that we have followed, for instance, if you go on this one where we talked about the Bollinger Band, on the Bollinger Band we use like a probabilistic approach, which means we use like confidence level based on the probabilities in order to predict when the market is going up or when the market is going to go down, and based on that we had our buying, selling, buying, selling signals. All along the way, we build our buying and selling signals based on the normal distribution. This type of indicators, such as the Bollinger Band, BB Bollinger Band, again, I repeat, or even the RSI, I'm talking also about the RSI, are working very well in this type of situation when the market is very stable. When the market is very stable, you have different cycles which are following each other, and you can draw a normal distribution at the end. And thanks to this normal distribution, you can predict when you are reaching -2 standard deviation, what is going to happen. You can predict that the market is going to go up. In this video, we are going to try to answer the question, and now, how can you trade in this type of situation? When I'm talking type of situation, when we have lot of outliers. For instance, if you take the example when the Federal Reserve raised the fact that they're going to increase the interest rate, we had the market, we had like a big crash, which means we had like a data point in this place. When Russia announced that they are going to legalize the crypto market, we had a new data point in this part of the normal distribution. And if you take a look at it through mathematical perspective, what is interesting to notice is most of the profits are in this outlier, either in this part for the shorting, or avoid to lose a lot of money is to be able to handle this type of points, data points. And similarly, when the market is going to go up, it's very interesting to catch these outliers. And if you want to catch these outliers, instead of taking a probabilistic approach, which is going to work well when the market is stable, when it's following the normal cycles, it's interesting to use these trending indicators in order to be able to predict the market by creating a resistance level based on the trend. So let's go back on our trading indicator that we have covered just before with RNDR. Okay, here's the market on daily basis. Let me change it to 30-minute basis. Okay, it's calculating. Okay, perfect. Here we had our super trend that we have draw. Here we have our super trend that we have drawn. And if you take a look at it, for instance, here on this trade, we would have taken 6%. But if you take a look at the super trend indicators, you always have like a lag on the market. And for instance, when we are like on a period where the market is stable, you will see when we are ranging, as you can see, is not super effective. Here you would have opened your long right here. Here you would have opened your long here and closed your long here, which means like you would have faced loss. And if you want to avoid this type of long trades, and if you want to avoid this type of bias concerning supertrend indicators, I worked on the supertrend indicator that I'm using, and you will see that's like magic. Let's change the indicators for and coefficient factor of 2. And if you take a look at it here, we would have gained, for instance, on this trade, if we follow these indicators up for the same trade, we are opening it here and closing it here. Okay, we're taking 7% instead of 6. here we are taking, essentially we are closing the position much more early, and it's catching a little bit more with the market, and just by working on the lag that we are using. And the type of indicator that we are going to use today is the Supertrend indicators. Let me try to get it on more longer periods. Perfect. For instance, right here, if we take a look at it, again, we come here, up, we take 6%. Again, that's something which can be perfectible, but what is very interesting with this type of indicators, because that's giving you the trend, and what I'm giving you today is like a basis that you can take in order to improve it and to mix it at your way and to adapt it to each crypto. Here I'm using it on RNDR. I would work a little bit more on the parameters for this case in order to make it a little bit more efficient. But what's very interesting to notice here is like almost each time when we are like breaking this type of indicators, for instance, here we had like a lot of news on the market. And if you take a look at it, you're taking all the way long. Here this trade is 30% in 2 days. And this trade is up, you shorting the market at this moment, and you close your short, which means 10% in 1 day and 1 hour, which means that you have taken 40% in this period. Plus, and if you take a look at the previous trade again, up, we have right here, we have taken 22% on the short, and we have taken a long of 7% and another long of, okay, we're entering right here and exiting right here, of 5%, which means like in just a few days, while the market have been ranging, if we go from here to here, the market took 17%, we would have taken around 60% return, which is very interesting when we have like a market which have a lot of sharp movement. As you can see, is very, very, very interesting to use it. And as soon as the market starts ranging, you will see that it's not as much good. That's why when I was talking about 40% winning rates, that's why we have like such low win rates. But what is interesting is like with 1 or 2 trades, you can cover 5 days of ranging market with 1 or 2 trades. And it's working even better on the BTC. For instance, if you go and if you want to trade on the BTC, okay, let me try to get it. Okay, I think I have like an issue with TradingView, but whatever. Okay, let's go back on our plan. So now we worked on the, okay, that expired. Okay, perfect. Now that you have worked on the parameters that you are used, so what you have to take from it, the ATR lag, I can make a video on how you should define the parameters and how you can find the right parameters for each crypto. Here I just took an example. We are going to take a lag of 4 and a coefficient multiplicators of 2 instead of 10 and 3. But again, that have to be defined for each crypto differently. Okay, cool. Now that we have covered these 3 points, we can start programming and take this bot to another level. Okay. And now for the programming part, I'm just going to take the exact same frame that we have covered during this video, how to cut Binance Trading bot in 5 minutes using the RSI, Relative Strength Index. I highly recommend you to see it, because I'm not going to go back on how to get an API key and all these details. That's one of the basics. That's a video that you have to keep on your side, because we covering all the basics on how you can develop a live trading bot from A to Z. And we are going to take this script and we are going to adapt it to our case. Okay, let's start by making a copy of this script, of this Binance Trading bot, and let's call it Supertrend YouTube. Up. Let's rename it. Okay, now that we have our new trading bots ready, what we're gonna do here is a title. Okay, well, we don't need to change the title. We are going to take the exact same libraries, but on top of that, I'm going, because the Supertrend indicator is not available on Talib, I can show you how to develop it step by step, mathematically speaking. That's going to take for us 20 or 13 lines of code. Otherwise, I can recommend you to use imports pandas TA. TA is for technical analysis, as, let's call it PTA, Pandas Technical Analysis. Essentially, if you type it here, Pandas TA, you can have information on how to install it. Just copy pip install Pandas TA, and you're gonna get this this library. That's going to be the library that we are going to need. And let's quickly, before to start coding, just have like a quick coverage on how app that's sketch together, sketch now. Up. Let's get back to how we should structure our data for our trading bot. If you remember last time, we talked about the fact that you need like a script. Here you have your Python script. Your Python script is going to replace you as a human, and this Python script is going to send order to your broker. It's going to discuss with your broker. And how this Python script is going to work, the first step is to have 24/7 data for your Python script, which means like sending requests, receiving data. And with this data which have been received, what you are going to do with them, you are going to add your technical indicators or your mathematical field. I'm not talking about the AI trading bot, I'm talking about trading robot which is based on mathematics and science, not about a trading bot which is based on AI, which is also mathematics and science, but not an AI trading bot. I'm talking with a trading bot based on an algorithmic approach. So we're going to require the data. The data are coming here, up here our calculation. And based on this calculation, we're going to have to write our trading decision strategy. And based on this trading decision strategy, we are going to have our buying or selling signal to sell to the bot, to the broker. But at the same time, you're always going to have like the 24/7 approach. If you take a look at the script, again, I'm also like currently writing an article on Medium with all the code for this, all the code details. I didn't finish it, but if you go on Medium on my page, I'm going to post the link below. I think in the next 2-3 days you're gonna have like an article about it. So let's go back on the code. The first step gonna consist of importing the library that we have that we got last time, then importing pandas TA as PTA. I already inserted my key and secret. After that, it's going to be to connect to Binance. If you go back on our graph, that's the first step, is connecting Python to Binance. Once we connected Python to Binance, we are going to request live data with this loop, and within this loop we're going to have the data in this format. Because if you go back on how Binance is sending us the data, I wrote an article about it right here. If you go, because when you download the data from Binance, what is going to happen? You're going to get the data through this way, which is not readable, and it's not easy to build an algorithm based on this type of data. That's why it's more interesting to, first of all, clean the data through this loop and get the data through correct form. Okay. Once we got the data, we're gonna get the market data through this form. And after that, instead of calculating the RSI, we are going to calculate our super trend. You will see it's quite easy with Pandas with PTA, Pandas Technical Analysis Library. The first step that you're gonna have to do here, you can write a function. I'm just going to write it manually, but again, like that's just going to be a frame, and for you, you can write it with more beautiful way, if I can say it this way. You can write it by a way which is more, what you can call that, beautiful, or more efficient. But here, just a frame, and after like, again, that's something that you have to adapt to yourselves. But here, I just want to share with you this bot and how you can code from A to Z this bot and to run it while you are sleeping, and to start making some money with this bot, because that's a bot which is working super well in this type of market, mainly with low market cap stock. And crypto, it's something which is killing. Okay, so instead of calculating the SAR, we're going to calculate the super trend. That's going to be the next step. If we go back on our graph, if you remember, let's go here. First step, calculate our field. And once we calculated our field, Up, let's execute. After that, we're gonna have to work on the trading strategy, and the bot is gonna be able to run. Okay, let's start by calculating the super trend. How we are going to calculate the super trend? That's going to be PTA, Python technical, Pandas technical analysis. And if you type shift, and you're gonna have super trend right here, up, and between, if you type shift, enter, sorry, shift, mash shift, you're gonna have that. So you need 4 different arguments. The first one is the high, low, close, length, and the multiplier. If you go on trading view, if you remember, up, the length is 4, and the multiplier or factor or coefficient, you can calculate it as you want, is going to be 2. Okay, let's do it. Let's go back on this one. So the first argument that we're gonna need is TF high. Second argument is going to be TF DF low, and the third argument is going to be DF close. Once we got these 3 arguments, after that high, low, and close, we need the length, which is ATR 4, and the multiplicator. So let's execute. Okay, DF is not defined. Okay, yes, we have to, first of all, to download the market data. Let's download it for RNDR USDT. Up, 30 minutes. Up, and let's take 3000 minutes. Up, we're gonna get our, okay, here we get our function get data, execute it. Perfect, we got our market data for RNDR, and now we can execute that. Okay, as you can see here, we got 4 different columns, and what we have to do, we have to concatenate this table with this table in order to have like a table with our OHLC value plus our super trend indicators. Let's do it just below. Up. Let's do DF, and essentially and impact the DF table. So this is going to be equal to pd.concate between parentheses DF SPT axis equal 1 up, and print the DF table. SPT is not defined. Okay, yeah, I forgot super trend. I want to call it as super trend. Perfect. And now we have our final table that we are going to use for our strategy. Either you can push it like we did last time through this way, otherwise you can just copy this line of code within the strategy function. Up, Control C. And for instance, now, if you want to take a look a little bit more in depth about this table, what we can do, we can just extract the data. What I'm going to do, up, I have like a line of code below. Let's execute and let's extract the data. Up. And if we execute this line, we're going to have the data already extracted. We can go on Excel, and you can take a look how it's looking like. Your DF table gonna look something similar to that, which means on the first column you're gonna have your OHLC value, then you're gonna have your super T 420, which means that the value of the super T then the super trend line, which is going to be either below or above the closing price. Here, for instance, we are below. And what's happened on this column is like when we are below, this column is filled with a value, and when we are above, that's going to be filled by NA. And conversely, on this column, when we have our super trend value which is above, that means that we need to short the market. We're going to have like on this column -1, which represents a short, and on this column when we are on a long, we're going to have like a value of 1. That's how the data going to look like, which means that on our algorithm, what we are going to use, we are going to use this column, which means like the value of -1 or the value of 1, in order to send our trading signals, which means when we have a value of 1, that means we have to buy, and conversely, when we have a value of -1, we have to sell. On our Python notebook, so we don't need anymore this function. You can write it through a function, that's fine, but we don't need it anymore. And what we are going to do, we need to alter the strategy in order to fit with what we were calculating. So what we're going to do in this case, the first thing that we're going to need to change here, instead of having this function algo calculation, you can have it through a function. It's going to be fine, but I'm just going to push it this way. Up, Control C. Up. Okay, perfect. No, you don't need to have it. Then either you can print the close price and print the current Supertrend value, for instance. Supertrend value, and the Supertrend value is going to be equal to df. If you remember well, it's going to be this column for the Supertrend value. And you can compare if your Supertrend is close or like if you are below or above the closing price. So that's going to look something like similar to that. Up, ILOC -1. Supertrend value is perfect. And now what you're going to do, we are going to alter this line of code, which is the trading decision. And what the column that we are going to take is Supertrend D, which is the value of the trigger of 1 or -1. We are going to use this column in order to define our trading signal. So instead of having RSI, we are going to say if our column Supertrend D up 4 to 0 is strictly equal to 1, we need to buy, because that means we have like a buying signal up. And once we have like our buying position which is open, we are going to close the position when we have the value which is reaching -1. Which means after we're gonna go on a while loop, which is going to be which is going to take the exact same pace. Up, and we are going to print the exact same values. Okay, perfect. Perfect, good. And now that's going to be conversely, we are going to take the same trigger column, and when we go to -1, we're gonna need to close our position. Again, here we have like our order, which means like when we are going up, we have to go on the side buy market, but everything is detailed in this video. I highly recommend you to go through it, and I'm writing an article to go into details about it as well. So we are going to go on market. I can go also in details about the type if you go on market or not. But something that I might do in the future that interests you, and here's the symbol, which is the pair that you are going to trade. Okay, here you pass the order, and after you hit a trigger, which is open position equal true. Again, we just took the same frame, just change our buying indicators and our selling indicator. Okay, I think our selling indicators here. So if we are equal to -1, we have to sell our position. Open position equal false. Okay, perfect. Okay, it looks good. Okay, here's like how you can pass an order on Binance. We don't need it anymore. We can erase it. And now, if we are good, it must be working. We can execute our USDT based on this decision. So we are going to take, exceptionally just for the bot, we're taking like 1 minute time frame, but I would recommend you to work on 30 minutes. And we are going to buy 5, which is the quantity. We are going to buy 5 around here as soon as we're getting to 1. So, and let's give a sleep of 5 seconds in between. Let's execute. Name strategy not defined. Okay. Yes. Let's execute it. Okay. As you can see here, we have our Supertrend value, which is below the current close price, which means we bought the position. Here we send the order, and now we are looping within this part of the graph, which is showing you how the, okay, let's stop the bot. We are looping within this part of the graph where we are looping through this part of the function, which is whilst the position is open, you have to check until we are getting to -1. Okay, and now if you want, I just want to have like quick data visualization just for you also to see how it works, how the algorithm is going to work live. Let's have like a quick data visualization that we have not done last time. I'm just going to copy and paste. Again, like if you want some data visualization course for the algorithmic trading. Again, if you want some data visualization part for algorithmic trading, I highly recommend you to go on the online course. You have like almost 2 hours course on data visualization for trading. It's perfect if you want to learn how the quick tips and tricks on how you can get your data visualization. So for the visualization, I'm just going to copy and paste the code that we have, and you're gonna see how the algorithm is going to look like. Essentially, okay, let's define 2.5 and 2.5. Okay, let's do it 2.2. Yes, here we have short, long, short. Here we're working on 1 minute data, but is how the algorithm is going to detect our buying and selling signal. Here is 6 p.m. UK time, and in Costa Rica right now, but okay, here's like MA20, MA5, but you have to change it to SBT down and SBT Supertrend down and Supertrend up. Okay, perfect. Okay guys, I hope you enjoyed this video. To close this video, I want to present you a website which has been developed by a girl who was in my class, but that's a concept which I would love to have 2 years ago and that I'm using now. Essentially, it's called Codum, and the concept of this free program is to connect 2 people who want to learn coding together. For instance, I have my coding buddy. You just have to log in, to create an account, to log in, and you're gonna be buddied with someone, and you're gonna have like, let's say, a catch up every week in order to progress. For instance, why I'm mentioning it is because I believe if you want to start with programming, or if you want to become better as an algorithmic trader or as a Python programmer, or if you want to learn data science, it's always good to have like an accountability partner. I believe it's something which is very interesting. And for me, it's very cool because every week I have like a meeting with my accountability partner, and we can make a point on how many hours I spent on my programming development, and it's something which is really amazing. As I told you, like that's a girl who was in my class with who I studied, who developed this concept because she was in San Francisco at this time, and she couldn't find someone with who she can motivate herself in order to start programming. And it's really cool because you just have to fill your information, what is your programming language, and they are going to give you how can I call, and you're gonna be able to match with someone. For instance, my accountability partner, her name is Vala, and every week I'm following her progress and she's following my progress, and it's cool. It's kind of fun. She also have a lot of experience, and it's kind of fun to have a programming partner. Just like kind of small tips, if you want to progress faster, to have this kind of accountability partner, I believe is something which is nice to have.